Market open, everyone. Happy Friday. A minute to go until the start of cash equity trading. I'm Francine Lacroix here in London, and here are your top stories. Not so Merry Christmas. Amazon and Apple warn of a slowdown this holiday season. Elon Musk is set to take over as Twitter chief executive and wants to reverse lifetime bans. Cracks in Frankfurt. While Bloomberg learns not all ECB policymakers supported a 75 basis point hike, the euro pair saw yesterday's plunge as the yen whipsaws. Plus, VW stalls. The auto giant cuts its full-year forecast for deliveries amid supply chain troubles and misses profit expectations. We'll hear from the chief executive this hour. Now, let's take a look at the futures. The focus firmly on some of the data points that we had. Also, a very big look at tech after the week that we have and what we heard from Amazon and Apple. For the moment, your stocks 50 futures down 1.1%, and we're seeing similar declines across the board with the FTSE futures and the DAX futures. Right, markets are just opening up, so let's get started and see how these equities will settle. Now, we did have a gauge in Asian equities sliding, China stocks also extending some of the losses, and then Japan's government bonds advancing after the central bank maintained ultra-low interest rates, projecting inflation will cool below 2% next year. A couple of other things I'm watching out for, of course, is the U.S. a 10-year yield, and then you can see the FTSE just opening up 0.8% lower. IBEX down 1%. We also have some PMIs. All right, let's get straight to what treasuries are telling us. The other story is, of course, U.S. dollar. Now, we did see some of the bond bull bets on a plateau. Rates, really the main focus of this week, and that will continue to go into the fourth quarter. This week, we also get U.S. personal income today, personal spending, pending home sales, and of course, that all-important University of Michigan consumer sentiment. Now, we're also getting some CPI out of Spain. This is for October. It's a preliminary figure. It's rising 7.3% year on year. Third quarter Spanish GDP rising 0.2%. So let's get straight to the markets with Justina Lee from our cross-asset team. Justina, great to have you. I mean, markets are all over the place, especially when you look at tech stocks. They really declined on, concern about the outlook. What's happening globally?
Yeah, I think we're really seeing concerns of an economic slowdown everywhere. And that's why we've kind of seen a rebound in global bonds lately and stocks falling again. I think on the bond front, people are starting to talk about peak tightening again, especially in Europe, where there's been like some discussion kind of out of the news report about whether ECB officials are looking ahead to, whether to keep up with this pace of tightening to curb inflation.
So do you think, actually, we talk about the Fed pivot every 2 months. The Fed's like, no, we're not pivoting, we're staying the course. What's priced in?
Yeah, I mean, I think that's a good question. I think people are still fairly certain we're going to get a 75 basis point hike coming up. I think, pivot talk now is maybe a little bit more pushed back. We still have pretty elevated inflation figures. Of course, we're going to get an update again today. I mean, traders are still talking about maybe, even a pivot next year. But I think generally we're kind of starting to see some common bond markets and investors coming back in with such high yields.
Just, what's happening in China? We saw quite a steep sell-off.
Yeah, I mean, I'm sure some money managers are going to be asking themselves, is this a value trade of a lifetime? But I think the issue with China here is people have been looking for some sort of turning point in policy. And if anything, they've only been getting indications, to the opposite, with Xi Jinping kind of consolidating power, sticking to COVID zero, and also no clear easing signal when it comes to like the beaten down property market.
Justina, overall, I mean, I know we're also seeing warmer weather, across Europe. And when you look at what the ECB was saying, is there a danger that we're too complacent, that that inflation has somehow peaked, and so that they'll avoid a recession?
Yeah, I think that's kind of the question here. I mean, we've kind of had, as you mentioned, a bit of better than expected energy costs. But at the same time, I think the picture in Europe is maybe a little bit different, because with Europe, it was always concern about energy, whereas in the US, I think people are still looking at indicators in the labor market to see whether that's kind of cooling a bit.
Yeah, and yen, I mean, there's so much focus actually on yen and when they need to intervene more. Is this like the great financial experiment?
Yeah, I mean, it's kind of interesting as people keep wondering, is BOJ going to join the rest of the world in kind of turning its monetary policy around? But if anything, I mean, the indication we're getting out of its meeting today is that it's kind of sticking to its guns. And part of that is because it doesn't see inflation as a big of a problem in Japan, and it actually sees those consumer price growth cooling next year.
Justina, thanks so much. Justina Lee there, of course, from our MLive team. We'll have plenty more on the markets. In the meantime, Volkswagen actually cut its vehicle sales expectations for the year. This is as chip availability remains scarce, but also logistics, the chief executive says, continue to pose a challenge. It reported third quarter results about an hour and a half ago. They missed expectations also due to costs related to, for example, not only supply chain problems, but one-off charges on its business in Russia. And remember that Porsche IPO also listing cost them about 1.6 billion pounds, actually billion euros. Now, we spoke with the chief executive of Volkswagen this morning, and I started asking him about the supply chain issues and how recession risks are actually hurting customer demand. Here he is.
We are living in challenging times with numerous global crises, and the supply chain issue is one of this. What we have shown once again that the Volkswagen Group is in a very resilient situation. We lift up our operating profit to 17.5 billion euros right now, with a profit margin of 8.6%. And we have faced the supply chain issues, overall semiconductor crisis still. And what is very important to be very flexible positioned, understanding very clearly with transparency the whole supply chain, and step by step we will improve, but we will be faced still during the next years.
So the situation I understand you think will improve even in the fourth quarter, and then when is it no longer an issue? Is it 5 years from now, or are we just going to see this constant readjustment?
I think because of the several crises we will be faced during the next decades, still with crisis, geopolitical crisis, supply chain issues, and therefore the best what you can do is to be having a financial resilience, what we have shown during the crisis in the last years, and to prepare yourself being flexible in the global regions.
Are you expecting actually consumer demand for your cars to hold up, even if there's a big downturn economically?
Yeah, up to now, we have still very strong order intakes, and we think step by step, but also what we do in the Volkswagen Group is think in opportunities. And what we have shown during the last months with our financial robustness, that we will be prepared for the future.
You've also pulled out of Argo AI, the driverless tech company. What exactly triggered the decision?
Yeah, we started years ago with artificial intelligence, and especially when it comes to autonomous driving. And there we are investing very heavily. We ordered our approaches. We published that we will have a partnership with a Chinese company, Horizon Robotics. And then our footprint will be to work together with Bosch for the other regions of the world. And we are in good talks with another partner for the approach for autonomous driving. And then it will come step by step, level 2++, level 3, and at the end, level 4. We are very advanced on the technology level, but at the end, it has to do a lot with also regulations in the different regions of the world. And so we are going for autonomous driving. We think, especially in artificial intelligence, there are a lot of opportunities for the future, and therefore we are investing heavily.
But do you still think that fully